Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending August 13th. Moving firstly to the S&P 500, and here we see a change of trend today, a candle making a higher high and a higher low. The market's done that on an indecisive spinning top type candle. It suggests that we may see difficulty in the market moving further to the upside. The indecision in the market is within the Ichimoku cloud, and as mentioned on quite a few occasions, worrying factors here is the market hovering above and below the Ichimoku cloud, and it suggests a lot of indecision for this market in the longer term time frame. Now for today's candle, we've seen the market test up to the 2093 level of resistance and the Kijun-sen indicator and above the cloud and be rejected from there, and also test down to the top of the highlighted zone, test down through the Tenkan-sen and just through the bottom of the cloud and be rejected from there. So a lot of indecision in this market, not only in the longer term time frame but also in all time frames, including the short term dynamics throughout the trading day. Buyers and sellers are very confused as to direction in this market in that very short term time frame. So we need to be patient, wait for a breakout, and we're not going to get a clear breakout in the longer term time frame until the market tests down below, either below 2040, below that yellow zone, or well up above the major high 2134. Next, moving to the Nasdaq 100. And here we see a change of trend with this candle today, but a candle where the sellers have taken back control of the market. So this is not the ideal way to set up a new first time frame uptrend. What we would have liked to have seen would have been a white body and perhaps the buyers at least taking some form of control. They've lost all of that control. The buyers actually tested to the top of this highlighted zone, as we've seen previously, and we've seen very strong selling coming in off the resistance there. And with the sellers coming into this market quite strongly, there is a suggestion we could see this market trade lower. Now the sellers will need to breach down through 45.10 support. That has been an important level in the recent past, but if they can breach through there in a bearish manner, we could easily see this market testing down to the window that was opened up, which extends down to about 44.36. Now just moving to some of the sectors, and we're comparing them to the equities market using the ETFs to do so. On the top here is an Ichimoku chart of the actual ETF, the sector ETF. On the first subchart, we have a relative strength comparative compared to the S&P 500 ETF SPY is the code. And firstly, looking at the material sector, ETF XLB is the code. We see negative trading down below the Kijun-sen and the Ichimoku cloud, suggesting a strongly negative market, but the market attempting to rally here through the Tenkan-sen indicator. The Tenkan-sen has been holding as resistance recently, but if we look at the performance, previously very strong underperformance against the overall equities market, but starting to perform on pace with the equities market. So something of a reallocation perhaps going on back into the sectors, into the materials sector to a degree. Momentum of that relative strength is actually starting to trend up. We're not above 100% yet, but there is an opportunity here for it to turn up above 100%. The energy sector is the next, and very strong negative trading down below each of the Ichimoku indicators, attempting to rally here, holding up above the Tenkan-sen indicator. An opportunity here for the buyers, if they're strong enough, to trade up through the Kijun-sen. They found resistance there, but looking at relative strength comparative, previously very strongly underperforming and now performing on a par. So reallocation going back to the energy sector here to a degree. Previous strong sector was the financial sector. XLF is the code. And if we look here at the Ichimoku cloud, we've seen something of a retracement with the market testing all the way through down below the cloud and finding some support through there, and really suggesting that there is some weakness in this market here. Previously strongly outperforming the overall market, and just recently trading down through that lower band, suggesting some underperformance here, and that was on that day when the market tested down through the Ichimoku cloud. So something of a reallocation going on here, and we see perhaps a capital flow to a degree away from the financial sector. Next, the industrial sector, XLI is the code, and something of a recovery, now trading up above the Kijun-sen indicator, and the Kijun-sen holding as support for this market. An opportunity here for the market to trade higher. Shouldn't be really looking at this until the market clears up through the Ichimoku cloud, but we're seeing a recovery here in terms of relative strength comparative to the overall market, previously strongly underperforming, then performing on a par, and now just starting to trade outside of that upper band, and momentum of relative strength is trending up very strongly and now just up above the 100% level, and suggesting that we could see an outperformance against the overall market in the industrial sector. But with this market, we really do need it to trade up above that Ichimoku cloud. And now to the utility sector, and here we've seen some good strong capital flows into the utility sector. We've seen a very strong recovery from previously trading down below the Ichimoku cloud. The market's broken out through the top of the cloud, finding support at the cloud, and then very strong uptrending price action over the last week. The Tenkan-sen holding has strong support for this sector ETF, and should continue to do so. The support coming in at 44.29. In terms of relative strength, strongly outperforming the overall market by trading up above the upper band, and momentum is up above the 100% level and above the upper band as well, so very strong upside momentum in terms of relative strength. Looking at volatility, volatility is trending higher very strongly off a cyclical low, and this suggests that we certainly could see continued upside in this sector ETF, the utility sector. One worrying factor here for today's candle is the small body, and it suggests that we may have seen something of a hanging man pattern. Looking for confirmation of that, looking for a lower high and a lower low, but I suggest that if we do see that, we're likely to see strong support coming in at the Tenkan-sen indicator. Moving to oil futures, and here the second last candle on the chart is the one we're analysing, and here we've seen a strong bearish breakout down below the important 42.45 level of previous support. If we look here, it was a major low in the recent past. Back in March this year, the market rallied very strongly off that level and tested all the way up to the $60.68 level. We've seen the trend run down very strong first and second time frame downtrend, and testing now in a bearish manner now through that important 42.45 level of support. In terms of the Ichimoku, we're trading a long way away from the Ichimoku cloud, so this market is looking very overextended in the depth of price action away from the cloud and also away from the Kijun-sen indicator, so it wouldn't surprise to see some buying coming into this market. At the moment, in this current candle as it's developing, we are seeing formation of a potential hammer type pattern. Now, it is early days for this market, this new session, but if the market closes in that manner, it may suggest a possibility of a change of trend to the upside. Obviously 42.45, if the buyers are strong enough, they could test up to there, but they may find some strong resistance around that area now. But I suggest that if we do see the market attempt to retrace, and if we can trade through there over the next few days, we're likely to find very strong resistance at the Tenkan-sen indicator around that $44 level. Now, just looking at our Fibonacci extension tool, and here we saw the market prior to today's close trading around the 100% level at 42.70 and finding some support around that area on that doji type candle. It set the market up for a potential change of trend, but this is very important. When we see these potential reversal patterns, we need confirmation of them, and we didn't see that confirmation today. We didn't see a change of trend. We saw the sellers continue in the market, so very important to confirm any of these reversals. Now, this bearish activity down below the 100% level suggests that we could see crude oil, light sweet crude oil or NYMEX oil trading down to the 161.8% level, which is at 38.49. But there are some more important support areas before we trade down to that level. But just using the Fibonacci retracement tool, we're in an expansive mode of that very small first time frame uptrend, trending down all the time since then. The market testing around the 261.8% level for today's trading, and it has closed, failing to breach down through there. But the short-term dynamics in that candle don't favour the market trading to the upside from there. If we see a strong bearish close down below the 261.8% level, around this $42 level, we could see a test down to the 423.6% level at 37.49, but as I've mentioned, based on support and resistance, and this is it. We do have quite a few important areas before the market trades down to those Fibonacci areas. Moving next to the US dollar, Japanese yen, and once again for the session prior to today, we saw the market selling off quite strongly from above this highlighted zone and above the 124.70 level. And if you recall previously, we've been watching that area quite closely in the recent past, and every time that we test above there, we can breach up through there in a bullish manner, but we don't see the follow through, and then the market tends to fall apart. So here previously in June this year, we tested above there, no follow through. Very strong bullish close above there, and then a strong answer from the sellers to trade the market all the way back down through the 121 level of support and through the Ichimoku cloud. The market then rallied up through there in a bullish manner, lack of follow through. Again, 2 or 3 trading periods ago, the market trading up through there in a bullish manner, but selling off quite strongly. So obviously this is an area that we do need to continue to watch at the top of this zone above 124.70. For today's candle, following the very strong selling of the previous day, we see formation of a white body candle, so a switch in net momentum to the upside, but the buyers have found very strong resistance at the top of that zone and around the Tenkan-sen indicator at 124.53. The introduction of indecision in the market suggests that we may not see the market breach back up above 124.70. We could see the sellers come back into this market and test 2 lower levels. Support at the bottom or around the bottom of this zone, very close to the Kijun-sen indicator, around the 123.27 level.